in radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome to the Financial Survival Network. It's Kerry Lutz. The date is June 3rd, 2015. It's Wednesday. That means it's What in the World is Going on Wednesday with Andrew Hoffman. Andy, wow, it looks like Friday's the day of reckoning, but the stock market keeps going up. Just like real estate always goes up, the stock market always goes up, right? Or am I missing something?
Except that, forget stock markets. I mean, I'm still amazed at this whole, I don't know if the word recovery is more appalling to me or the concept of housing recovery, when all the anecdotal evidence shows that the only place you've had a housing recovery is in the 1% of the market. Home sales, home prices haven't budged anywhere. The only thing that's budged higher is debt. And the only reason it hasn't gone up more is because people can't afford houses anymore in this depressed economy, which is why you have not only record low rates of home ownership and home buying, but family ownership. People can't even afford to get married and have kids anymore, which is why much of the Western world's demographics are falling apart. So, across the board, everywhere, you couldn't have worse economic data. Today's no exception. But because governments forget the central banks are lowering rates, so it's driving liquidity into the markets. No. The central banks are now buying stocks. They're all telling you, the Japanese tell you, we are buying stocks. The Swiss, those defenders of conservatism, financial conservatism, they tell you, we are buying stocks. And of course, you know that the government here is. All you have to do is look at the algorithm. So again, all you have to do is try to realize that bubbles are unsustainable, and there aren't words for today's bubbles. I mean, we all lived through 1999. I didn't think that something like that was possible, let alone in an environment of economic hell. At least then, that was the peak of the global economy, and people were optimistic and had jobs. Today is the worst point of the economy of our lifetimes, and people don't have jobs and they're in debt, and the bubbles now dwarf the ones back then. Of course, they're going to all collapse. And again, I can't emphasize enough that around the world, many of them already have. The only things that remain standing are, the big Western stock markets that are manipulated, the bond markets, which are, as we'll talk about later, starting to fall apart, and of course, the paper Ponzi scheme that is the COMEX, where less than $500 million of gold, of actual gold, supports the largest financial Ponzi scheme in history.
Yeah, well, the amazing thing to me, Andy, is that it keeps on going on, and nobody seems to care about it.
Well, the 1% certainly don't care about it because they're the ones that benefit from it. They'll just say anything and do anything to keep it going. And as for the 99%, there's a reason why CNBC has record low ratings going back to its inception in the early 1990s, because people don't have money anymore. They don't have wealth. It's not like they're invested in the game. Right now, they're just invested in trying to pay the bills. And it's comical. You saw a perfect example of this is, just on Monday, they reported personal income went up 0.4% last month. Some tiny amount, but they get all excited about it. But the point is, the only people whose income have gone up are because of these mandatory wage increases at the low end of the market, which, for instance, Peter Schiff has done a great job of showing how it destroys the economy further. So the people who work at Walmart, Walmart just announced they're going to raise the minimum wage for their people working in their delicatessens and their supermarkets. They'll get a little more money that they're not going to spend, which is exactly why consumer spending didn't go up, despite this big boon. For the average person, the people like us in the middle of the market, our incomes don't go up, but our costs of living do. And their income goes up, but not enough to matter. They're already deeply in debt. So again, no one is making any money except for the people who are in the financial markets that get the free money. And this creates the wealth disparity. It also creates the inflation of a lot of the other aspects of our lives and further causes social and political instability. I just read this morning that Obama has the lowest presidential rating in history, despite the record high stock market and plunging unemployment rate, et cetera, which, as we know, are all fabricated.
So why do you think Walmart and others are raising their minimum wage? Is it PR,
Yes.
or yeah, it's strictly PR.
Yeah, I mean, this is Obama's thing. I mean, we're running up to the election year. The Democrats want to maintain office, so they're promising more entitlements. So one of their stratagems has been to really focus on getting the minimum wage up. And of course, minimum wage is such a subjective thing because different industries require different minimum wages. It depends on supply and demand, and different industries have higher supply or skills than others. But he's just basically going to any company like McDonald's is another example where people are angry because they're making so little and saying you've got to raise your rates or else. So they're raising it. Big deal. They still make a lot of money. Of course, Walmart's sales have been terrible, but they still make plenty of money, and they just make less money. And the people get a little more money, but it's not enough to matter because they're so deeply in debt to start with, and the cost of living is rising so rapidly despite the deflation we're told is going on. I mean, remember, the first quarter, with that minus 0.7% GDP, featured the first negative price deflator in 50 years. I think it's 65 years since the government last tried to tell us that the cost of living went down in a single quarter. Now, I have never been personally more cognizant of the exploding cost of my living, not just of the new things that get added on, but the things that are already there. And yes, the price of gasoline fell in the first quarter. Actually, it bottomed in January. But as I wrote in an article last year called "Median Hell," gas is only about it's like 2 or 3% of the average person's cost of living. And guess what? It's since rocketed up. The average gasoline price since that first quarter is up 65%. So let's see what they use as their GDP deflator in the second quarter.
Yeah, well, we know all about government statistics.
Double seasonally adjusted at all.
Yeah.
Double seasonally adjusted. I mean, that's, this is something that they just announced last week. They just like John Hilsenrath is the Wall Street at the Journal, his job is to write about, they told him what to write about what the Fed's doing. Steve Leisman at CNBC, they used to tell everyone, what they want them to hear, which is, well, we're hearing that the government thinks that their GDP calculations for the first quarter are too low, even though historically there's no data to show that. And even if it was, well, who cares if the first quarter is lower? I mean, it would, as Peter Schiff would say, it would get washed out in the second quarter. So they're now double seasonally adjusting it. They're actually going to call it, starting this quarter, second quarter, GDP plus, meaning it wasn't big enough last time, so we're just going to make it bigger. And no one's going to believe it. And it's certainly not going to change the Fed's policies of doing everything they can to slow interest rates down, not to get them going up. And then we'll get to the bond market crash in a second.
Yeah. So bond market, man, the Bund is taking it on the chin, and that's in spite of European QE. I mean, what gives there?
And so is it here. Look. I wrote an audio blog or spoken audio blog a month ago called Tectonic Market Shifts Portend Disaster. We talked about it here when I couldn't say the word tectonic. But basically, this started a month ago when interest rates, just like, you watch the oil price inexorably rise against the fundamentals. And in my view, that's what I call the oil PPT, because you couldn't have worse fundamentals for oil. But the same thing has happened in the Treasury yields market, not just here, but overseas, where rates have just started to creep higher no matter what happens. And the economic data couldn't be worse. And yet rates just keep creeping higher and higher. Zero Hedge would call it the mystery seller of bonds who comes in every day, to take rates up. So something is afoot. And as we learned, especially as we learned that the mysterious Belgian buyer turned seller now is actually the Chinese. There's no doubt the Chinese are dramatically selling off their U.S. treasuries, but that doesn't explain how the entire world is seeing rates go higher. It's a pretty scary phenomenon, as you mentioned, in Germany. I mean, today was an ECB meeting where Draghi said, we just increased QE and we have to keep printing money ad infinitum. We'll do everything. We'll do whatever it takes. And as we speak, this has been the worst two-day stretch for German bond yields since the global bond crash in 1998. I mean, the yield on the German bond was, I think, 0.2% a few weeks ago. It went over 0.8 today. That's a monstrous increase for an economy that's collapsing. And it's not just there. It's all across Europe. And look at here, the U.S. 10-year yield bottomed at the end of January at 1.6. It's 2.34% this morning. And no, it's not because the U.S. economy is getting better. It's because whatever force is pushing up rates around the world is doing it here too. And of course, we know that rates have been at multi-century lows with the worst debt situation, the worst fiscal situation ever. Of course, the U.S. Treasury yield should be 23%, not 2.3%. So what should happen is starting to happen. Now, how the central banks react to it is going to be the real question, because look, the Japanese are already all in. The ECB is all in. They started their $1.2 trillion QE program in March, and they just raised it by 10% 2 weeks ago. The only one that's not, and of course, the Chinese, which are going berserk and have created the biggest equity bubble in the history of mankind. Put all the other ones together, and you're not getting to what the Chinese market has turned into, thanks to the PBOC. The only one that's left resisting is the Fed, which claims to have tapered off its QE, even though its balance sheet sits at its all-time high right now. And still, interest rates a year later are still at zero, or I should say 8 years later are still at zero. The only thing that's left is the Fed trying to pretend and do everything it can to hope and pray that something will enable them to raise rates without destroying the market. The problem is that the rates are going up already. And if they try to make them even any more, if they God forbid said we're going to raise rates, it'll implode everything. So I still am calling for as I call it, the Yellen reversal at some point, probably later this year. I can't imagine how we can get through the year without it happening. She's going to say, you know what, things are getting pretty ugly out there, and we really gotta stop talking about raising rates and start thinking about alternative measures of easing, because we need to get interest rates down. And she may not say it that way, but that's how it will be interpreted, because that's what it is. And when that happens, say goodnight to the cartel's ability to hold gold down, and say goodnight to the end of any hope in the propaganda in the mainstream media in Wall Street of trying to convince anyone that there's a recovery anywhere coming.
And yet, I think it was yesterday or the day before, gold was up $10 an ounce, and then all of a sudden it was flat. Just amazing the way free markets work in America and the world today, isn't it?
Well, just like all you have to do is watch, as I call it, the Dow Jones propaganda average. Watch. I mean, there can't be less than 30 times in the past 2 or 3 weeks where the Dow was stopped magically at exactly 18,000. I mean, 4 times yesterday I counted it. And then, of course, they run it up today on just horrible, horrible news everywhere. And it's no different with gold at 1,200. It's been there for 2 years. I mean, they pushed it down to 1,200 2 years ago. And every attempt to go over it, including, as you said, it was kind of shocking Monday, because for once you actually saw, and of course, it was only, between 8:30 and 10 a.m. Eastern Standard Time, which is the only time gold is ever allowed to have any kind of move higher, ever. Despite the fact that the U.S. has no gold and the COMEX has no gold, and the U.S. is not a major buyer or seller of gold, but somehow that's the only time it's ever allowed to go up. But yeah, it actually went up about $10 in a few minutes, the way it goes down hundreds of times a year. And of course, they just knocked it back down because naturally it went above 1,200. And then yesterday it challenged 1,200, and then last night it challenged 1,200. I mean, they don't stop. But the fact is, down here at 1,200, which for all the people saying gold's going to crash, it's been here for 2 years. Despite all of this supposedly bullish news, it won't go any lower because, one, it's way below the cost of production, and B, there's massive buying. I mean, the numbers are showing that right now, as we speak, Indian and Chinese demand is taking up all of global production. Heck, the Indians, those idiot Indians, I call them the worst government in the world, they lowered interest rates again today to the lowest level since 2 years ago when the rupee hit its all-time low, and they had instituted those gold tariffs, which have just created this massive black market in buying of gold. And now they lower rates again, so that's just going to increase the gold buying over there, et cetera. So, I mean, across the board, you're seeing massive buying in the physical markets, tight supply. The miners are on the verge of collapse. Just keep your eyes, for instance, on the South African miners. Look at Goldfields and Harmony and Anglo Gold. These guys are heading to bankruptcy. And that's because gold can't be below $1,200. So you have this massive floor down here, technically, fundamentally. And, at some point, the buying is going to swamp the selling. And again, the COMEX is just purporting. This is the biggest liars in the world. And even all they do is purport to have about $450 million of gold. That's it. I mean, even the Greeks might be able to scrounge up enough to buy all the gold on the COMEX. But of course, we haven't even talked about Greece yet, which on Friday owes a measly 303 million euros and pretty much has said, we don't have it. Remember last month, they had a payment. They literally stole the IMF's emergency reserves to pay back the IMF. Well, now they don't have any reserves left. So they are going to default on Friday. And if they don't default on the 300 million Friday, they'll default on the $1.5 billion that they owe throughout the rest of June. And of course, at the end of June, the 4-month bailout extension ends. They're not going to get an extension because no one wants it. So there's going to be a cataclysmic debt default that cascades across Europe and probably the rest of the world at some point in our future.
Yeah, I don't see any way around it. And then what was formerly the key job growth driver in the U.S., I'm talking energy, is still reeling. And OPEC's meeting Friday, if I'm not mistaken, correct?
Well, that's why last week's audio blog was titled An Upcoming Week of Infamy with a question mark, because between Friday, June 5th is the date of the Greek payment. It's also the date of the OPEC meeting. And again, it doesn't take a big an analyst to know that OPEC's not cutting production. They've pretty much screamed it for months. And why should they? I mean, the shale oil producers are their bane. They need to get rid of them. And they also need as much cash as possible because they're way underwater with their social budgets in their nations. They need the money. So they're not going to let the shale producers take their market share. And then you throw in the fact that, Iraq is basically hitting all-time high production as we speak. So is Russia. And Russia needs money with their ruble having collapsed. Iraq is hitting all-time high. Iran we're about to give them this deal so they can send 1 million barrels of oil onto the market, this nuclear arms deal. I mean, there's just no end, and you have record high inventory. There's just no end to the horrible fundamentals for oil, which, as you said, is the only sector in America that since the crisis in 2008, has had any job growth at all, has had any GDP growth. But of course, it was all fake. It was all because of the money printing, which caused Wall Street to lend all these shale producers $500 billion of high yield bonds to produce high cost oil into a low demand environment. So of course, that is going to implode too. There's just no way the oil PPT, as I call them, can win this war. And again, it's not just oil. I talked about commodity crash months ago. I talked last week, I wrote an article that says, just when you thought the worst had passed, because I was referring to what I call the copper PPT, because copper is such an important industrially sensitive commodity. I'm watching it go up for like the last month or two, while every other commodity plunges toward its 2008 lows. And sure enough, the base metal mini bubble has just burst too. That's falling apart now. And the CRB is only about 7% from its 2008 crisis lows. I mean, every commodity is falling. Food commodities, and I'm not talking about the ones that are influenced by these horrible droughts in California and Brazil. I'm talking about pretty much everything else. I mean, we're going to see a major farming crisis next year again because the Fed caused the cheap money, so Wall Street lent all these farmers money to oversupply. I mean, people don't realize that the price of rice, wheat, oats, soybean, corn, all these things are plummeting to multi-year lows. And then, of course, there's lumber. Despite the housing recovery, lumber prices are down 25% this year. So this commodity crash, as I wrote, basically as David Stockman, I'll give him credit, wrote in his Great Deformation, because of all the money printed and created all the oversupply over decades, will take decades to unwind. I mean, we're going to have oversupply everywhere, deflationary pressures everywhere, which, by the way, could not be better for gold and silver, especially because they're the only markets, care of price suppression, that have been undersupplied and dramatically so.
Ain't that the truth? I mean, we just have to look around, see what's happening to production and demand. As demand goes up, supply goes down. That's an anomaly.
That's right. And only in the gold and silver can you have it. Only in gold and silver can you buy the best insurance, the historically best insurance available for what's going on in the world at historically low prices. And it's for exactly this reason. They've pushed the prices below the cost of production for so long that there's been no discoveries, that the cost of inflation, the cost of developing the industry has exploded. And now, of course, you have higher oil prices. So anyone who said, well, the cost has gone down because of oil prices, nope, it's right back up. And again, the oil price, yes, the oil price might be 20% of the cost of a operating mine. But if you're talking about the cost of finding and developing resources, that's not even on the list. You have to find the stuff. That's the problem. You have to get it permitted. You have to pay the taxes. You have to pay the engineers. The engineers are dying off. They're just like in oil 20 years ago. There's no oil. There's no geologic engineers anymore. It's a dead business because they've suppressed the prices for so long.
Yes, we know that. And it's really unfortunate. But eventually, maybe it's going to turn around at some point. I don't see any choice but for it to turn around.
Well, the price will turn around, but the production won't. There's no doubt in my mind that peak gold is here already. And it's here for good, because if the price, look, the only way the price is surging, and I say it will, but the only reason, it will not happen until the cartel is broken. When the cartel is broken, it will be because demand has swamped supply, because people are fearful of currencies and they want real money. And when that happens, that simply means that gold is being remonetized. What if, for instance, it happens because the Chinese reveal they have 15,000 tons of gold and everyone wants gold? Well, guess what? All of the governments will nationalize every mine imaginable, and there'll be no more production. So there's no doubt in my mind we've already hit peak gold, and we're already at peak demand, and we haven't even gotten the West. I wrote last week, record high demand, record low sentiment, referring to Western precious metal sentiment. We have half the world doesn't even care yet. And an ironic thing is half the world has collapsing currency rates. Like Germany, I read, is the only current country in Europe where the people are actually buying gold. Despite in France, they're watching the euro collapse. French people aren't buying gold. Obviously, in Switzerland, you name it. So there's a lot of people left that are going to buy gold and silver, and the prices are at record lows, and supply has nowhere to go but down.
Yeah, we know it's going to happen. We just don't know when, but we certainly know what.
Yes.
And on that note, Andy, hey, keep writing, keep getting the word out. Check out Andy's work. Sign up for his daily missive, milesfranklin.com, and his regular audio blogs. And check out our site at financialsurvivalnetwork.com. Make sure you sign up for our weekly free newsletter, although it goes out when I get around to it, and our free webinars. Andy, we will talk to you next week.
Looking forward to it.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.